What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today we're doing a quick recap of what the markets did this week and today. Let's dive in. All right, so I'm recording this after the market closed on Friday, September 11th. Now, the first thing which I have been watching very closely is the precious metals market. Gold and silver and the miners have been continuing their consolidation pattern. This is a beautiful consolidation pattern that all three of these are in. After a big rally, when you see this kind of consolidation pattern, that just means that that energy is building up again. There's physics involved in trading and investing as well, and so you have the people who are profit taking, you have others who are looking for a good entry point, and so you see kind of a coiling of where the highs are and then where the lows are. You see that start to squeeze and squeeze and squeeze until it finally breaks out. And if the long-term trend is going up, then usually what you would see after something like this is just a visual pattern of what's going on behind the scenes, which is just accumulation basically of the position. And so beautiful patterns in all three of these. And the fact that the short positions in gold, the macroeconomic environment, monetary policy, fiscal policy, the global rush to dump fiat for commodities, the fact that none of that has changed means that there's still wind in the sails here. If we do see a break down instead of up after kind of this consolidation pattern has completed, then I would expect that to be swift and quick as the trading desks use that opportunity to unload some of their shorts. Now onto the stock market. I know that this week may have felt like a bloodbath for some, but if you look at what happened just this week, from the open on Tuesday, markets were actually relatively flat. You had that gap down on Tuesday because Monday the markets were closed because of Labor Day. You had the gap down to open on Tuesday, and they bounced around a little bit, but markets were relatively flat this week, and that's why we saw a massive bleeding out of volatility this week. The VIX just today alone was down about 10%. And so after a big rally, making all-time highs for, the S&P 500 and for the NASDAQ, coming back down, having this big, huge, swift sell-off, and then building a new base, this is exactly what I've been talking about for a while now, that, you tend to see these types of things happen. And so sentiment has started to shift. There was a little bit of euphoria and froth building, especially in the tech stocks. But overall, especially since there were most of the gains in the overall market were driven by just a couple of companies, there isn't the same capacity to have such a massive crash in the stock market like we had following the end of February, because most stocks haven't gotten back up anywhere near their all-time highs. The overall market averages have, but they've been driven by just a few companies. And so those few companies have had their correction now. And so it looks like if the narrative starts moving forward with the reopening narrative, less fear, lack of fear in the media, more talks of stimulus, cash that's on the sidelines. These are all things. Yes, we could see another leg down here. I'm not saying that we won't have any more volatility or that it's only up from here. But at this point, looking at what's happening in the stock market, it still looks like we're going to see all-time highs again soon. As always, I really appreciate you guys. If you liked the video, hit that like and subscribe button. Really helps out the channel. You guys are the best. Have a great day.